I don't like the underwriting that's been going on for a lot of stocks. I think a lot of stocks are overvalued that are new to the market. I think there's a lot of excitement. There's tons of liquidity in the market right now. And I think that unfortunately that's being abused. What is up, YouTube? Today we are going to talk about the growth trap that is going on in the stock market today. So stay tuned. It is your boy Colton, and this is the Financially Fit channel. And boy, today was an interesting day in the market, and we're going to review really quick what I believe is going on in the stock market, as there's some red signs in my opinion. Okay, first and foremost, if you are new to the channel, consider subscribing, smash the thumbs up. I am working remote and I am pulling over to do this for you guys, so hopefully you find this information valuable. As always, guys, the whole purpose of this channel is to put you on the right side of your trade or investment. So let's get into it. Today, what I noticed in the stock market was we saw a huge shift into safety in the market today. Basically, blue chip stocks that pay a dividend did extremely well today, while mainly your smaller cap stocks got absolutely hammered, as I think we all saw that. So basically today, I want to talk about some of your favorite stocks and just the ridiculous valuations that they have. And I want to go over that today and just kind of just give you my 2 cents, as you know, I think I do a fair job of not being biased and really just grabbing the information and interpreting it in a non-biased manner. And I think that's important when it comes down to investing. I have a big problem with this past year is not only the amount of companies that went public, but the valuations that a lot of the underwriters have given these companies, okay? Let's just start out with Palantir as the first one, okay? Palantir basically IPO'd between $23 and $25 and it just skyrocketed after the IPO up to roughly $35. When we look at Palantir's revenue and it's getting a $50 billion market cap, what do you think their trailing 12-month revenue should be if you're paying $50 billion for a company that is yet to be really profitable, okay? It's a company that's doing about trailing 12 months, 1.4 billion in revenue, okay? That means that you're almost paying 40 times revenue for the stock, okay? Palantir is a company I'm very interested in. It's a company that a lot of YouTubers talk about. It definitely has some appeal with all the, with all the opportunity that can come within the stock. How do they decide that a company should be IPOing at a $50 billion market cap? And what we're seeing with a lot of IPOs is that they're hitting the market at a certain point, but then they're coming out of the market 20, 30, 40, even 50% higher than the original price was supposed to be for the public offering. And that's almost stock manipulation in my opinion, right? It's like they test the market to know what people are going to pay for it, and they're like, well, how much more can we squeeze out of these people? Because what they're going to do in the end is they're going to sell their position at a higher valuation than they originally were planning, right? So in the end, they make more money. In the end, you're paying more, and most likely the stock is going to go back down to a normalized price, and you as the investor suffer. And on top of that, we have a lot of financial YouTubers that prey off of the popularity of these stocks and abuse that. And guys, make sure you stay till the end, because I'm going to give you my opinion on all these stocks at this point. Let's talk about HIMS really quick, okay? As you guys know, this is a stock that I have recently become interested in, around the $6 to $7 range. And because I think at that price point, it makes a lot of sense. And I'll explain my reasoning to why that is. It has a $1.5 billion market cap, okay? It's doing 228 million in revenue, and it's growing revenue at around 73%, okay? So absolutely growing revenue at a high clip, right? And when we look at the the yearly price of HIMS, it's down 28%, okay? And HIMS hit a high, just to give you guys an idea, HIMS hit a high of $24, okay? Guys, I wouldn't spend any more than $10 on this stock, all right? I think if you get in around the $6 to $7 range, you're still taking on a lot of risk. But in the end, I think there's a tremendous amount of upside for the health and wellness area, and I think that they're well marketed, and that with the way that they're growing revenue, I think it's a pretty safe price to enter HIMS. So I'm using HIMS as an example, guys, because I'm personally invested in HIMS. Well, how did I arrive at that price to pay for that company? Okay, first I look at how fast are they growing revenue? 70% is pretty strong revenue growth. I think we all can agree on that. Is the company free cash flowing? And, you know, HIMS is getting to that point where they're going to be free cash flowing. That means the business is actually going to be making money, right? The whole reason why we buy stocks, guys, is that we hope we're buying the future cash flow of that business, meaning that, yeah, we're taking on a higher risk because, you know, we're supposed to be paying a lower valuation. But guys, we're not paying a lower valuation anymore. I'm sorry to tell you, like, these companies that are trading at, you know, multiple $billion multiple $billion market caps are basically is basically saying that they're not going to make any errors. They're going to keep growing revenue strong. They're eventually going to be free cash flowing, and you're buying them basically at future value. Like, so there's no deals in these. There's no deals in a lot of these companies, in my opinion. Okay, up until recently, I would say up until recently, a lot of these companies are starting to become interesting to me because I can actually make sense of paying for these valuations now, right? I couldn't make sense paying for these valuations before, and that was the big knock, you know, that I had on a lot of these YouTubers. I just didn't understand what metrics they're using to pay these multiples, right? But what people are doing is they're talking about a story a lot of the times, okay? They're gonna get this contract and they're gonna revolutionize this. Well, what do we know today? We know today that you're paying a $50 billion market cap for a company that's doing $1.5 billion in revenue and that's not even free cash flowing yet. That's what we know today. So when I look at that, that is definitely bothersome, guys, okay? And it's happening across, it's happening across all different sectors. All right, so why I like HIMS at this price point: they're on the verge of free cash flowing. They're growing revenue around 70 plus. They're growing revenue at plus 70%. I'm paying under 8 times revenue to market cap, which I can get behind a company that is, you know, growing revenue at that speed. And they're coming into an interesting season, in my opinion. Okay. Next, I want to talk about Robinhood really quick, okay? Now, Robinhood, in my opinion, was way overvalued than SoFi. Guys, if you follow this channel, I was huge on SoFi at $13, okay? Huge on SoFi at $13, all right? I sold just before the $20 mark as I felt like it got a little overvalued. Robinhood is now getting interesting, in my opinion, for a few reasons. I personally don't own any crypto, okay? I'm not against it, I just don't own it, all right? So I do want to look at a business model that can make money from crypto, all right? And Robinhood does have that business model where they can make money off of crypto. So from that perspective, you know, I like Robinhood, okay? Because I want to get in I want to have exposure to the crypto space, even though I don't own crypto personally and missed that big run, but I still feel like there's avenues to still capitalize on crypto, right? And so I'm looking at Robinhood and I'm starting to find it interesting. They're growing revenue, the trailing 12-month revenue is growing around 245%, which is just ridiculous, okay? I don't know many companies that are growing revenue that fast. All right, so let's start with the revenue growth. Secondly, let's start with how much revenue they're doing. So they're doing about 1.7 billion in revenue. A lot of bad news did come out on Robinhood, you know, recently. Obviously, we all know that, and you know the SEC's kind of on them. But I mean, I think that, you know, when you start getting all that bad news, at some point it becomes a buying opportunity, right? And I think we're starting to approach an interesting time in Robinhood where it could be an interesting time to start building a position in it. They got $10 billion cash on the balance sheet, okay? They got $3 billion in debt, so they can cover that. Approaching a 52-week low, you know, so there's some safety built in that, I believe. And when we look at their market cap's sitting around 25 billion as of today, okay? And still in my opinion, that's pretty rich. It was trading at like 80 something dollars recently, okay? So it was trading at 80 something dollars recently, and that means that it was trading at a market cap of like over 60 billion, guys, right? Citigroup does, just to give you guys an idea, Citigroup does $75 billion a year in revenue, and their revenue growth is at 33%, okay? That is a monstrosity of a difference, okay? 75 billion versus 1.7 billion. Like, let that sit in your head for a second, because people were buying Robinhood at $85 and they're basically paying almost, you know, pretty damn close to half the valuation of Citigroup, that's doing 75 billion in revenue and has 33% revenue growth. All right, so there's this huge disconnection, guys, that I wanted to go over with you today, and I just feel like I do go over other people's YouTube channels because I want to see is there anything I'm missing. You know, I don't claim to know everything, so I think you can always learn something from somebody else, and that is important in your growth. I feel like if you ever get to the point of ignorance where you feel like you can't learn something from somebody, then yeah, I probably don't want to associate with you anyway. But I feel like you can always learn something from somebody, right? And when I hear people talk about certain stocks, I try to listen if I'm interested in those stocks, right? Because I want to know, is there some underlying value that I'm missing, okay? Besides the stories, guys, okay? I don't buy into a lot of stories, you know, unless if it's like contracts that are guaranteed money down the road, or, you know, there's an avenue of revenue that is new, that is not priced into the stock, I don't think. So when that happens, yeah, I'm really interested in digging in deeper. But when we're talking about some of these valuations, guys, they're absolutely overpriced. And just to give you guys an idea, okay, Citigroup is trading at a 6 PE ratio, 6, okay? So, you know, that even makes me question Robinhood's valuation still, okay? So yeah, I mean, do I think, you know, future, if I go 10 years out, I think Robinhood is going to be a player in the financial world due to the crypto, due to the ease of the platform, due to how fast they get information out, right? I don't have the Robinhood app, but I know people that do have the Robinhood app, and they always get information way before I do. And I would say that's probably a huge asset to Robinhood, is that they are phenomenal at getting information out super quick, okay? So, and last but not least, when we look at Tattooed Chef, guys, I recently did a video, and I felt like between $16 to $17 for Tattooed Chef was a reasonable price. And guess what? $15 to $16 was a reasonable price for Tattooed Chef. And guess what, guys? It hit those levels just like I said it would, and you know, that's what I think the stock is worth, you know, and that basically puts it at about a 1.3, I think, about a $1.3 billion market cap, right? And I think that's fair. Now it's doing 200 million in revenue, roughly. It's going to do about 215 million by the end of this year in revenue as they lowered guidance. Them lowering guidance, you know, and some of the questions I have with the company makes me want to pay more of a discount for the stock, okay? So that is how I come up with these valuations for the companies. I feel that, you know, this is something we need to talk more about, as I think a lot of people just spew out stocks just because there's a huge urge for people to learn, or you know, there's a huge urge for people to learn about certain stocks, right? They want to know what's going on with these stocks, and they want some sort of guidance. And you know, we go to YouTube a lot for this guidance, and I think a lot of YouTubers are spewing stuff just to get views because that's how they get paid, and they're not really giving you how they came up with these valuations, right? How do you pay $85 for Robinhood? How do you do that? How do you pay $60 for Robinhood? Why do you pay $60 for Robinhood? Okay, but now that we're sitting at $28, $27, I think Robinhood is getting pretty close to fair value. Honestly, the more I'm looking at it, I think probably $24, $25 is a fair value, but I started building a position now at 27, and the more I compare it to some of the other financial institutes, I still think Robinhood is a little overpriced, guys, okay? That is just my opinion, and I'm building a position in it. With HIMS, you know, I think it's an interesting position as well. Palantir is getting interesting at this point. Still extremely expensive, guys. $50 billion market cap is outrageous. What would I think Palantir, you know, what do I think a fair price point for Palantir is with their revenue growth? So let's see really quick what their revenue growth is. It's growing revenue at 43%, okay? It has 1.4 billion in 1.4 billion in revenue. You know, it's got 2.5 billion in cash and 263 million in debt, all right? what would I be willing to pay? I mean, geez. I would think a 25 to 30 billion dollar valuation would be more appropriate for a company like this. I mean, when you're talking about doing 1.4 billion in revenue, it's not like, negative EBITDA of almost $500 million. They're losing money, guys. Earnings before interest, taxes, depreciation, amortization, okay? Earnings before everything's taken out is negative $500 million. We talked about Citigroup doing 75 billion in revenue, growing their revenue by upwards of 30%, and their market cap is only 131 billion. Okay, how do you get a $50 billion valuation for a company that is basically burning money, is doing 1.4 billion in revenue, and I just, guys, I'm just putting my 2 cents out there. If I offended you in any way, I am sorry, but this is just what I look at, guys, when I'm buying stock, all right? And I wanted to cover some of these stocks, as it just seems like these are still overpriced, but they're definitely getting interesting. As I stated, I think Hims is interesting at these levels. I think, I think Tattooed Chef is good at these levels. I think that Palantir is getting interesting, but the more I'm looking at it, maybe it's still overpriced by a pretty good margin. I feel that Robinhood is pretty innovative. They're growing revenue at 245%, so you have to start looking at them at this point. So these are companies that get a lot of coverage, and I feel like from a non-biased party, these are my opinions, guys. Let me know what you think about these companies as well. I'd love to hear your feedback, and if I'm missing a lot of information, as I'm just doing a surface level thing, right? I'm not falling in love with the stories. I'm saying, what is their value today, and what am I willing to pay for them today, okay? Not baking in any sort of sexy stories, guys, all right? Sexy stories don't pay the bills. So that's, want to leave that with you guys. As always, guys, feel free to like and subscribe. Always appreciate the support. And yeah, we will see you next time, investors. Peace.